Finance Minister Enoch Godongwana has been summoned to Luthuli House to present his finalised proposal on the budget. ANC insiders say Godongwana is likely to lobby the ANC's top brass to approve his budget proposal, and that will then be presented to GNU partners. This comes after the tabling of the budget in February was cancelled as Cabinet had rejected Godongwana's proposal for a 2 percentage point increase in VAT. The revised budget is set to be tabled on Wednesday afternoon. The United National Transport Union and the SA Transport and Allied Workers Union have both rejected Transnet's revised wage offer. The state logistics company proposed an above-inflation increase of 5.5% for the first and second years and 5% for the last year of the agreement. Undu says the offer is an insult. It wants a 10% rise for its members, whilst the town says it won't move from its demand of a 17.5% salary increment. The parties will reconvene on the 26th of March in a final attempt to find each other. But should a deadlock be reached, industrial action should be on the cards. This would disrupt port operations and hurt South Africa's economy, which is already struggling. Confidence levels in the construction sector remain subdued. The FNBBR Building Confidence Index has come in at 41 points for the first quarter. That's a marginal increase on the 40 points recorded in the final 3 months of last year. This shows that nearly 60% of respondents remain dissatisfied with business conditions. Impact has reported a weaker financial performance for the year to end December. The packaging and recycling company has posted a 30% drop in headline earnings per share. That's as the group battled a weak economy and difficult trading environment. The firm also noted several factors such as high interest rates, cost inflation, and load shedding, which negatively impacted consumer and business confidence. A final dividend of 75 cents has been declared. This takes the total payout for the year to 105 cents. That's 12.5% lower than what was paid out to shareholders in the previous period. Merafe Resources has reported lower annual earnings. The miner's headline earnings per share fell back 29% during the period. That's due to weaker commodity prices and higher costs. A final cash dividend of 8 cents has been declared. That's down from 22 cents a year ago. Merafe says 2025 is likely to present increased challenges for the group, and so it is constantly evaluating strategies to enhance the business's resilience. AVI has reported a 10.2% rise in profit for the first half of the financial year. The consumer goods group puts this down to sound cost control and improved manufacturing efficiency. This helped the firm navigate a constrained consumer environment, supply chain disruptions, and global inflationary challenges. Looking ahead, the company has cautioned that while input cost inflation is easing, the competitive consumer environment and high selling prices will continue to weigh on sales volumes. AVI says it will focus on cost management and efficiency projects, but the benefits from those initiatives are expected to materialize only in the next financial year. Sun International is placing its bets on a profit rise. The hotel and casino operator expects annual headline earnings per share to be between 14% and 20% higher. The firm says this is due to a robust performance from its diverse portfolio. In support of that, Sun International highlighted its Sunbet business in its trading update, stating that the unit has continued on its impressive growth trajectory and is well positioned to exceed its ambitious growth target of achieving 900 million rand in EBITDA by 2028. More detail will be provided when the group opens its books on the 17th of March. In international news, US President Donald Trump said that his administration was in touch with 4 different groups about the sale of Chinese-owned social media platform TikTok and that all options were good. Here's more detail in this report.
Donald Trump says a deal to sell TikTok could be close. Speaking to journalists on Air Force One, he said there was a lot of interest.
Do you think there's going to be a deal on TikTok soon?
There could be. We're dealing with 4 different groups,
and a lot of people want it, and it's up to me. So there could be.
TikTok owner ByteDance had faced a January deadline to sell the app or shut down in the US. The previous US administration had viewed the Chinese app as a national security risk, as did Trump in his first term. But he has since revised his position and, on returning to office, signed an executive order delaying the ban by 75 days. Trump subsequently floated the idea of selling it to parties including Elon Musk, his ally in government cost-cutting efforts. He has also suggested that the US should get a stake in the app, which analysts value at up to $50 billion. Speaking last week, Trump said the 75-day deadline could be extended if more time is needed to do a deal.
I think, look, we have a lot of interest in TikTok, and China is going to play a role. And so hopefully China will approve of the deal, but they're going to play a role. But we have a lot of interest in TikTok.
On Monday, the identity of the four interested groups mentioned by Trump wasn't clear. Among those to recently express an interest is former Los Angeles Dodgers owner Frank McCourt. There was no immediate comment on Trump's claims from TikTok or ByteDance.
And Japan's Seven & i Holdings said that talks have begun with Canada's alimentation Couche-Tard over a store sale plan that would set the stage for a $47 billion takeover bid. Let's take a look.
7-Eleven could be getting closer to a takeover. Japanese owner Seven & i said Monday it has begun talks with Canada's Alimentation Couche-Tard over a store sale plan. That may set the stage for a $47 billion takeover by the Circle K operator. Seven & i has previously said that US antitrust law would be a barrier to any agreement, as the two companies combined would dominate the convenience store market there. They would have about 20,000 outlets in the United States. In a letter to shareholders, Seven & i proposed examining how divesting stores could address that and what buyers might be interested. Last week, Couche-Tard said it had already begun talks with third parties about such a sale. It says it has identified a portfolio of US stores that could be offloaded. Last week also saw Seven & i name outside director Stephen Dacus as its new CEO, the first foreigner to hold that post at the Japanese firm. He's been tasked with leading its recovery and responding to the takeover offer. At a news conference on Friday, he said investors needed a quick decision.
What I do not think our shareholders would want is for us to spend 2+ years in limbo just for that to be rejected by the U.S. courts. That would not help shareholder value. It would not help our business. It absolutely would not add to our company's value.
US investor Artisan Partners, which holds a big stake in the Japanese firm, on Sunday urged Seven & i to look again at the Couche-Tard offer. This week, executives from the Canadian firm are expected to visit Tokyo to talk to the media about their bid.